Hello, friends. Happy Thursday. It's Mortgage Mark. Let's talk about it. The Fed met yesterday, so obviously that's always fun, right? Let's see what's going on in today's mortgage world. Here's the deal, guys. Rates are coming down. They're getting better. That's good for us, guys. Here's FreddieMac.com. Updates every Thursday, as you may or may not know. 0.8 points gets you something around the 5.3 range. And you guys can see the last week or so has been a good little run. Remember, green is good. So we're coming up. Now, we are starting to see this level of resistance. There's another one above it. I don't know that we're going to go too much farther than where we're at, but still, I will take positive. I will take flat. And you guys can see since June, June right here was it June 5th. Rates have been relatively flat for about the last, let's call it 6 weeks, give or take. So the high was back in mid-June, June 13th, June 14th, somewhere in there. That was kind of where the high of rates were, the high fives, and now we're back in the low fives. So good for us, good for rates. As you guys probably saw in the headlines, rates have increased by 0.75, or they increased them again by 0.75. And so really, what does this mean for everybody, right? So what people don't understand is that when the Fed raises rates, it's actually a good thing for mortgages. Why? Because they're doing that to squash inflation. You guys have heard me say this over and over and over. Inflation's north of 9% right now. So if they can calm inflation, that should help mortgage rates. And by raising rates, really the number one thing they're trying to do is, lessen demand. They're trying to make it more expensive for people to do things, so that way less people will do things and less companies will do things, and that will then result in lower inflation. And I love this cartoon. COVID, stuck inside. Inflation, stuck inside again, right? Because it is expensive to go anywhere and do anything. Here's what was kind of the bigger news, I think, of the week, which is not necessarily a great thing for all of us, right? But there was a 8.6% drop this last month for June in home sales. It's expected to only be about a 1% drop back in June. So pretty significant drop. That's actually the biggest drop we've seen, even pre-COVID. Normal times, I think it's been like 20 plus years since we've seen a drop that big. So that's not ideal. You can see a lot of that's out in the West. I know we got a big presence out in California. Man, it's been quiet out there. So a big decline nationwide. Now, again, here's some good news, right? Let's get excited, guys. Hooray for Texas, hooray for Dallas. I always believe it's a good time to buy regardless of market, right? So in other words, you don't buy a primary home for an investment. Yes, people will want to, and it is a big wealth builder. But the reality is, if the time's right, you're having twins and you're at 900 square feet, buying a home sure beats renting. There's no doubt. Rents are no picnic. They're going up. But check this out. You can tell folks, again, they should be buying today. Why? Because just this last month, appreciation went up 1.5%. Annually, it's still 20%, 19.7%. But look down in the lower right, guys. Dallas-Fort Worth. Bam, baby. Number 3 on the list for top cities, the appreciation of what's going on. So 30%, which is nuts, 2.6 per month. Only Miami and Tampa are hotter right now. So these are some great times to buy. Again, people are going to say, no, the market's crashing. I don't see it. I mean, even a flat market, it's still flat. It's not crashing. So, yes, things have slowed down. There's no doubt. However, things are still really good. So what we're trying to stress to people today, guys, is, buy the house today, lock in the price. Yes, if rates go down, in the future, you can refinance. That's not the forever rate. If rates go up and up, and they always go up, then that means today is the lowest rate you're going to see. So buy either way, right? So this last one, guys, I watched this video like 3 times. It's crazy. Just fun. If you got 3 minutes to kill, just watch it. It's people doing amazing things. There's a baby in there doing things I can't do. I think the kid's like probably 1 year old in a diaper doing things I can't do. But check this out. Super, super fun. But again, the biggest thing I can tell you guys is, again, stress to the home buyers that now is a great time to buy, right? Whether you're a realtor or builder, we're providing the same message to them that even if the market, let's say, goes soft, right? And let's say home prices lose 1, 2, 3, 4, 5% in value, right? That is significant on the home size, right? You say, oh, it's 10 grand. Yeah, I get it. But what if they don't go soft? What if we continue getting 1 and 2% a month appreciation, which is what we've just seen in Dallas-Fort Worth, right? Dallas-Fort Worth is not the headlines that we're seeing in the newspapers. So stress to them. We got people from California calling us every stinking day, right? So Dallas-Fort Worth is amazing. We're saying that message. Please echo that as well. Again, your rate, it's either going to go up or go down. So if we get it today and rates go up and up and up, that means you're getting the best time to buy is right now. If you buy today and rates go down 12 to 24 months from now, which, by the way, I think they will. So in 12 to 24 months when rates are down is a great time to refi. So please, I know it's softer market right now. Let's convert better. Let's give the people the information they need to make an educated decision, and we will go from there. But appreciate you guys watching. Have a great remainder of the week. Peace.